Welcome to another stage analysis video. It's Sunday the 9th of April 2023. We've got a lot to get through this weekend as usual. I'm going to start off with a special focus low on what's been going on with some of the most popular stocks in the market, the mega caps, as obviously they have some heavy weightings in some of the major indexes, obviously the key ETFs as well. So there's a bunch of them starting to attempt to move into early stage two, like Google here, testing its stage two level at the moment. So I wanted to have a quick review of those first before we get back into the more regular weekend content in the indexes, futures, industry group bell curve, market breadth data, industry group RS rankings, the watch list stocks, and a little bit of crypto at the end of the video. Have a little chat about what's going on with Bitcoin as well there. So start off today with as I said, with a special focus on some of the mega caps at the moment. We're starting with Google here. So if we can see on the weekly chart here, this is just over a 3-year chart, a little bit bigger than I usually show because of the video content here. So just keeping it in the normal size and range. So you can see it's currently testing the stage 2 breakout area at the moment, the pivot that formed back in what we got there late January. So at the moment, it wasn't the largest stage 1 base you've ever seen. It's only technically moved into stage 1 back in January here, after basing for many months before that in stage 4, but starting to show obviously signs of stage 1 behavior and now testing that early stage 2 level. You can see from the volume it's been drying up a little bit as it's moved up towards the stage 2 level. But with large mega cap stocks like this, you don't necessarily need heavy volume in order for it to move into stage 2, as it's in so many ETFs and indexes, etc. The volume is very, very different to what you see in the likes of the small cap stocks. So relative strength at the moment, you can see just testing what we call the Mansfield relative strength zero line, which is this line here, which is the 52-week moving average of the stock divided by the S&P 500. So you can see on a 52-week basis, it's just starting to outperform here, which means it's just moving above what we call the zero line there. So currently attempting to test the stage 2 level, but not quite there yet. You can see if we go back in time here, the previous stage 2 advance, so potentially started to move out into stage 2 around this kind of area here back in 2020, late May 2020 there, obviously more convincingly in late June, and then rebounded back into what we call the backup zone here, the secondary entry area, started to move up more convincingly up and out into a decent stage 2 advance throughout obviously the 2020 period here. So from there to the top, it had a good 100+% move in that regard before rolling over, forming a head and shoulders type stage 3 top as it started then, before then starting to break down more convincingly into stage 4. So it's had a decent stage 4 decline here and starting to turn. If we look at it on what we call the stage analysis technical attributes score here, so this is the 10 key attributes that we look for in order to determine the stages. It helps with stage analysis for those that are obviously less familiar with just doing it visually on the charts. So by giving the 10 key attributes that we look for a stock to be in stage 2 or not. So when it's got a score generally of a 7 or above, it tends to be more in a stage 2 environment. Not always. You can see here with Google, we had a score of 7 here for a week back in 30th of January there, when it formed its first pivot top, which if we go to the daily chart here, it did move above the 200-day moving average at that point. And that's now formed what we call the stage 2 level. So just testing that level at the moment. You can see the SATA score at the moment is up to an 8, so potentially moving into early stage 2, but the 30-week moving average, as you can see here, hasn't yet turned up. It's still negative at the moment, but it's very shallow, so could easily, if the Google continues, could easily start to turn up there, which is obviously a key requirement for it to be in stage 2. So if we look at the daily chart, you can see it a little bit more clearly here, just testing the stage 2 level at the moment. As I said, rough guide for a stage 2 level, first pivot above the 200-day moving average is a good rough guide. Doesn't always be the case. It can change over time. You can get further levels that form below that level as time progresses if it doesn't break out above that, or if the level is far too high above the 200-day moving average. an up thrust type move, etc. So, but does give a general rough guide when you just get a quick pivot above the 200-day moving average, and it rolls back down again into the range to become the potential stage 2 level. So as I said, just testing that stage 2 level. What we're looking for here would be a good strong follow through move, potentially then forming a backup before starting to move out more convincingly into stage 2. So the 200-day moving average to start to catch up at that point there. So if we look at Microsoft, it's already moved into stage 2 4 weeks ago now. So this was your stage 2 level here, a bit further down now. So had an initial up thrust stage 2 attempt that failed and came back into the range again. Didn't undercut the 30-week moving average by very much, but did actually push down and started to decline again. So would have potentially shaken out anyone who took the first stage 2 attempt on the daily, which turned into an up thrust. If we look at that on the daily, you can see the up thrust action here. So if you were taking one of the breakout points through these kind of areas here on the attempt, obviously that then rolled over, potentially would have got stopped out as you came back through either on a break even or obviously as it came back in towards the 200-day moving average. So as soon as you start to move below that 200-day moving average, that would be an automatic exit point in the method, really. Stan likes to, as he said in the Heretics of Finance book, one of the key ones is the exiting on the 50-day, the 150-day and the 200-day moving averages with a multiple exit strategy there. So coming back below the 200-day moving average by this much is a bit of a no-no there. So that's a failed stage 2 attempt, and then started to move back out into stage 2 more convincingly again, although it hadn't yet obviously broken that resistance zone from there. So it doesn't necessarily have to, if you fail, it doesn't necessarily have to break the high of the up thrust, it just has to come back above the stage 2 level again to move back into a potential stage 2 attempt once more. As you can see with Microsoft here, got it's about 10% above the breakout level now, so a little bit extended in the short term at the moment, still running up. It's above its 2 ATR level at the moment, so not extremely extended. You can see when it pops above the 3 ATR level here, you tend to get a short-term pullback, but still running within its normal range at the moment, just in a strong short-term uptrend. Go back to the weekly here, as I said, 4 weeks at the moment. So potentially if we do get a backup move in this and it starts to come back in, ideally wouldn't want to see it come back below the stage 2 level, but with obviously this support resistance level here, you ideally wouldn't want to see it drop much below there. So could potentially start to form a base in this range if it goes sideways, as it's in a zone of resistance at the moment from this pivot point from last August 2022. Nvidia also been in stage 2 for a while, been one of the strongest stocks in the market year to date. So had a good strong stage 2 breakout early in January there, started to move. We've had maybe coming up 11 weeks now in stage 2 here. I think that is, just quickly grab it. 11 weeks in stage 2 currently, starting to consolidate at an old resistance level here. So moving into resistance, a little bit extended there. If we look at it on the daily, you've got a little tight range forming at the moment, little short-term buying climax, automatic rally, secondary test that's rolled back over again. So we've got shorter base structure in here. If we drop to a lower time frame, you can see that a little bit more clearly. Let's go to a 2 hour. Here's your short-term structure at the moment. So initial points, obviously phase A of a base structure, so moving into phase B of a base structure at the moment, so looking for some tightening up in here, maybe VCP action, but if it does undercut, then obviously you'd be looking for some spring type action for it to come back up again. But at the moment, obviously continuing to look like one of the strongest in the market here, although obviously stalling in the short term. Apple also gradually moving up into stage 2 here. We talked about this a little while ago, about 3 weeks ago now. It came up in the watch list. We go to the daily, so highlighted it last in the watch list on this day here, back on the 18th of March, I think that was, weekend, and then started to move up into stage 2. As this is a key one for the market, you've got a little bit of a inverse head and shoulders pattern on this one before it started to move up and out into stage 2. You can see volume has basically been very quiet as it's moved up, but obviously doesn't stop it from moving. There's just a lack of supply as it continues to move higher here. So moving into early stage 2 for 3 weeks at the moment. Again, if we get a backup move here, we don't want to see it come back below the stage 2 level. Ideally, we want to see it hold that. Might get a little down thrust below it, but if it does, you want to see that close values above that level and start to rebound, potentially start to move higher in early stage 2 there. Amazon, much worse than most of the other stocks we've been looking at here. You can see still only just getting back to the May-June pivots here from 2022 after a much deeper stage 4 decline. Up thrust move here into the 30-week moving average. So still showing stage 4 type behavior here, just back above the 30-week moving average for 2 weeks now. So would now be tentatively called stage 1A. It just means early in stage 1. As you can see, we've got this, what we call a change of behavior here compared to previous rally attempts here. So stronger rally move, a little up thrust above the 200-day moving average, gives us our pivot range there. So this is our range. If we start to get back above this 115 level, then potentially could start to move into early stage 2. But obviously after such a deep stage 4 decline and long stage 4 decline, have a lot of overhead resistance in this one. But you can see the 200-day moving average just starting to flatten out here, but still below its 200-day moving average. Relative strength still below the 0 line here. So showing relative weakness compared to the other large caps we've been looking at there. Meta, on the other hand, exploded into early stage 2 back in January, consolidated for a little bit, and then started to pop higher again for the last 3 weeks. So still obviously some big resistance from the depth of the stage 4 decline that this one had and the V bottom. So grinding its way higher. We'll look at the daily chart here above its 21-day moving average. So very, very strong still, not even testing the 21-day moving average in the short term since mid-March there. So continue to get the ATR bands on there, but not showing extension above the free ATR level much here. Very, very tight volatility in this at the moment. So showing signs of continual accumulation at the moment. So until we get a change of behavior on this, obviously the short-term uptrend remains. So in early stage 2. Tesla, on the other hand, as you can see, we've got back below the 30-week moving average this week. The group as a whole is in the bottom 10 of the RS rankings at the moment. It dropped minus 10.8% this week. You see relative strength versus the S&P 500 on a one-year basis there. Still well below the 0 line. Was the strongest stock through the January, early February rally, and the pullback has been shallow by compared to that. So if we look at it from a fib level here, you can see the pullback only came into popped in close to the 50% level of the move. So showing obviously short-term bullish characteristics at the moment, just moving into what we call early stage 1 again at the moment. So testing the 30-week moving average, got first close above it. So starting to form a potential stage 1 structure at the moment on the weekly here. If we look at it on the daily, that then gives us our stage 2 level at the moment with this range at the moment. So here's your potential stage 1 structure at the moment following this change of behavior rally here. So getting tighter in there, but the percentage move on range on that is still reasonably big in there. So 33% range at the moment. So it does start to move back above this 220 level. You can see the 200-day moving average just starting to flatten out here. Then potentially that would 220, 230 area potentially start to move into stage 2 in that regard. But obviously if it starts to break the lower levels here back below this 170, 160 area, then potentially could make a continuation and fall back into stage 4 continuation attempt. So in a neutral position at the moment, developing in stage 1.